So talk for a second about why do you think operators like your format as opposed to a more traditional private equity format?
Because I can create a capital structure or suggest several capital structures that align the capital with the actual execution and maximizing the value of the real estate.
Got it.
So it's not the capital telling the operator there are 3 years left in the fund life.
You have to fit in this box.
Right.
You can give them a few options or something like that.
Right. So a pension fund may have a lockout provision.
Yeah.
There may be fee heavy.
Sure.
A private equity fund may or may not be able to do a deal that's a development deal. So I don't have an investment committee. We don't change deals midstream. We don't put strange items and documents at the last minute. Mm-hmm. It's a very simple promote structure. It's a phone call to me, and we can meet the next morning and talk about a deal, and we can create the capital. So it's in my mind, coming out of an institutional background, which was great organizations. Mm-hmm. It's an opportunity to create capital structures that are more customized, less programmatic, still rigorously underwritten, iconic operators that have capital access anywhere and choose to come to us, not because we're cheaper, we're not because we have easier control provisions, we don't, it's all industry standard, but ease of execution, ease of use. We're working 7, 8, 9th generation transactions with iconic families across the country that choose to come to us instead of the name firms that are just tougher to work with.
Mm-hmm. No, it's good. It's very, very interesting. All right, let's change courses for a moment.
Hi, Mo.
Let's see. What opportunities for growth or type of properties or regions, sort of let you answer it the way you want, but where do you see opportunities for growth, or where do you see, if somebody's bringing you a deal, what would you like to hear on that deal, either geographically, property type, or plan for execution that really gets you excited today?
Right, so we're a niche player in a sense, or characterizes as a needle in a haystack. We've got 16 current operating partners. We operate nationally. So what we like to see are low basis deals that haven't hit the market. Maybe there's a dysfunctional seller. Maybe there's a distressed seller. Maybe it's a family that has an estate issue. So with 16 operators in multiple asset classes, we like low basis, and I can give you examples if we want to talk about that. Multiple asset classes, sustainable demand drivers, hospitals, transit, universities, so that not only do we have upside if we're doing a value add, which is largely what we do value add, we do equity recaps, really no core. And if we can find that opportunity with that operator in a market that really is, most markets are overbought in most asset classes.
Okay.
But in a relative sense, if we're not in an overbought market, secondary market, tertiary market, but yet still sustainable demand drivers, low cost basis, and capital that is flowing, so there's liquidity to our asset. Mm-hmm. That's what we look for.
That's great. And if you were going to choose one asset class today, and you can't choose multifamily, that you would be most excited about to see a deal on, like something you're really sort of hankering to get more into, or you think that there's real upside now that it's been beaten down so much, what asset class would you choose if somebody showed you a deal today?
We like urban, and we still do suburban, but we like urban plays where there's a multi-use.
So mixed-use urban type deal.
Platform, correct. And one of the reasons we like that is because I guess what we've all seen, you can use certain pieces of the economics of that real estate, monetize certain pieces to buy down your basis in other parts of the real estate. So
Interesting.
what's an example of that? 2 city blocks downtown where the bottom floor might be leased to an office or retail user that you can monetize either on a sale or refi, that condominium component, buy down your basis in the vertical, whether that's office retail, multifamily.
Sure.
And again, then what you're positioning yourself as an investor is lower basis, because you bought your basis down. Sustainable demand drivers around the university, transit, hospital. That's a really good play for us. Those are difficult to find,
Yeah, agreed.
but we have operators that do that, and we love those deals.
That's great, very interesting. Well, Jake, I want to thank you for spending a few minutes with us today.
Thank you.
Really appreciate it. It's been Andrew Benioff and Jake Reiter for Verde Capital with the Lenrock blog. Thank you very much for joining us. We'll see you next time.